Make no mistakes about it, Tesla is a well-oiled machine that is outperforming many other tech businesses and certainly every other auto business. We'll dive deeper today on Tesla's Q3 financial results, and what you'll see from the income statement will impress you. No, Tesla is not being propped up by regulatory credits. Tesla's margins all rose across the board. Energy at a record 31.4% margin, auto at 17.1%, and services, the dark horse, jumped to 10.5%. Could this be the first signs of the use of superchargers by other auto companies? And what happens when FSD uptake skyrockets? Free cash flow at $4 billion, and now Tesla's making $25 billion per year in cash flow from its operating business. That's a sign of a very healthy business. Today we've got Larry Goldberg joining us. He's a serial entrepreneur with 50 years of entrepreneurship and has been an active venture capital investor for the last decade. Welcome, Larry.
Thank you. Appreciate you, Herbert, and appreciate you being back so I can relax a little.
I put you to work. I really appreciate you, of course. We've had that. I appreciate that you did that.
Seen my bill yet, yeah.
Big fat zero. No, just kidding. Lots of appreciation. So, one of the things you've done so well is examine the company. Initially, when you were listening to the earnings call, there was this, you kind of interpreted, and then you quickly understood, oh no, I said the wrong things, and you backtracked a bit. There are some negatives from this earnings call in terms of financials, but there are a lot of positives also, especially your comments about the cash and how this company's done this way. So let me just set the stage a little bit. Roland Percher did a great job telling us, kind of in this visual here, the income statement for the Q3 2025. Do you want to walk us through this, kind of like how you understand the business?
Yeah, I mean, if you look at the business right now, by far the largest contributor to margin is the auto business. If you look at it, it's the largest sales source, and so the revenue is larger than everything else. The margins that it generates, even though the margins are lower than the margin percentage, is lower than the other businesses. Service is still lower, but certainly larger than the energy, lower than the energy business. It generates a very much larger actual dollar gross profit. So if you look at the services, you'll see that, if you look at the gross margin, you'll see that the gross margin for autos is larger than energy, which in turn is larger than services, even though the percentage of energy earnings is higher, almost double that of auto, and 3 times that of service. So that just gives you a sense of it. But I will say that energy business is growing dramatically faster. This graph doesn't give a sense of growth. The energy business is growing dramatically faster than the auto business, and I expect the energy business within 3 years, to equal the revenue of the auto business, and therefore the gross margin of the company as a whole is going to grow very dramatically.
Yeah. So right. So energy was $3.4 billion and auto was $21 billion. So it's not insignificant. It's 10%, right?
Yeah.
But the margin is $1 billion versus $3.6 billion of auto.
That's right. That's right.
30%. And the margin is double. So, the question is, would Tesla stay creating cars if you can make so much more money in energy? But what we haven't considered is, where's FSD and where's Robotaxi? Because every car is no longer just a car, right? It's going to be generating recurring revenue over time. So no, I'm not saying that we're no longer an auto company, but it's so lucrative.
Yeah, there'll be another stream of income and another stream of profit. And this other stream of income and other stream of profit is going to be the Robotaxi business. And the Robotaxi business is going to grow very dramatically, and its margins are going to be huge compared to the margins of the other pieces. So if you can imagine doubling the width of the incoming revenue and increasing the margin, and
80%
having a whole nother leg to this graph, then you will understand that. And by the way, the operating costs are not going to rise in the same proportion. they're going to rise only marginally with this growth of a new business. They're going to grow, but marginally compared to the new business. And so the profitability of this business is going to explode. The same is true, by the way, of energy. I see the energy tripling over the next 5 years. And if that's true, and it at its margins, then the auto business is going to be, of the three components, and that is to say, a
Yeah.
robotaxi, energy, and auto. Auto is going to become the laggard in terms of contribution to this company.
The auto part of it. Yeah, that's great. I love that analysis, Larry. That was good. And if you look here, you already talked about this, but where was I going to go with this? Yeah, this company. We'll talk about cash separately shortly, because that is one of the most important things is cash. But here's a company that made $5 billion of profit. So yes, quarter to quarter, but hey, it's healthy. Let's talk regulatory credits.
Well, it didn't make
There's a
$5 billion of profit in the quarter.
sorry.
This is
This is
gross.
not.
Oh, gross profit. Yes, correct. Yeah.
Yeah. Okay. This is so regulatory credits. Obviously, one of the themes everybody, so many haters of Tesla will point to, and they'll say, "Oh, Tesla's propped up by regulatory credits. If it wasn't for
Yep.
that, they'd be bankrupt as a company."
Yeah.
0.4 billion, and just 4 billion. That's all it was. And there was. Let me just sorry about this, guys. Let me jump to this here. Oh no, I don't have it. Okay. I think there was a chart by Søren Basher that he showed that explained that regulatory credits is just tiny, as you saw there.
Well, it is
So
tiny,
that's
but it is marginal. It adds significantly to the auto margin. 0.4 billion is regulatory credits. It's hardly to be seen in terms of the revenue, but it all falls to profit.
yeah.
So while it's a very small part of the total contributing revenue, all of it goes to functionally all of it goes to the bottom line. So while it's a tiny portion of the top line, it's a much larger portion of the bottom line, but it's going to become infinitesimally small part of the bottom line for two reasons. Because of the growth of the robotaxi business, the growth of the energy business, and the growth of the service business, even if the auto business doesn't grow measurably, is going to swamp that margin.
And we'll ask you about superchargers from other companies, FSD. That will show up in services and cash flow. But let's continue the conversation on margins. So this is the margins by segment. Thank you to Alejandro Chavez to put this together. Energy is at 31%, auto at 70%, services at 10.5%. That's the record. Look at the jump in services, and he's saying that for those interested in FSD progress, this is where it will show up first in services. This is FSD, purchases of FSD. But also people think that 10.5% is because of supercharger use by other auto companies. What's
Absolutely
your
is. Yeah,
Yeah?
absolutely is.
So do you think that part of that jump was that too? Was that?
Yeah, the margin in that on those sales are very good, and we see constant increases in numbers of superchargers, constant increase. Just it's not that they plod along, it's that they plow along. I mean, they're just doing a stellar job on expanding the universe, which is going to be very important as the number of EVs grow. And it's not just Tesla EVs, and it's not. By the way, the number of superchargers are going to explode in order to support the higher the robotaxi business. So, but we won't see those numbers because those will be internal.
I wanted to ask you because you did deep dives on energy. Remember at one point years ago, some Tesla bulls came out and said, "Oh, Tesla's going to be 50% margin." And then Tesla came back and said, "No, it's going to be around 30%." And here we are at 30%. What's your expectations for margins for energy?
I think margins are about where they're going to be. They may compress a little bit because when they sell very large projects, their margins compress, and there are reasons that, from a battery supply point of view, that margins are going to compress. Batteries are big. Lithium ion batteries are dropping in price like a stone, and
Mm-hmm.
we'll see some very strong competition in the battery business. Um, so they will compress marginally. What does keep the margins a little bit healthier is the retail battery business is at much better margins than the large scale. I'm in the midst of an analysis of the backlog, and that's actually a very interesting situation, which I'm going to publish later today. Um, and that will be that will give us a view of what's coming in the future. Last quarter we saw a disruption in the growth of the backlog. It actually declined.
Yes.
This quarter, it resumed its upward climb, and so, but the analysis of that backlog compared to the growth of revenue is quite interesting.
Oh, looking forward to that. Check out his Larry's X account at Tesla Larry. This is where you got original research, and he does deep dives. And you did one on energy a year and a half ago, and it
Right.
was like very deep. You really went all the way there. That's why I call you the energy expert.
And by the way, the revenue from energy is consistent with my original projection.
Yeah, you ended
Mo-
30% too. I remember that
Yeah.
you were around the 35%,
Yeah.
and that's what turned out to be where others kept going. It's gonna be 50%. I remember that. Okay, so let's talk cash flow. This is one of the most important metrics for you to evaluate with companies. And Gally kind of pointed out, hey, with 6 billion operating cash flow, and this quarter, it's around 25 billion per year in cash flow from its operating business. This is before Cybercab and Optimus. Now, Gordon Johnson, a bear, a Tesla bear, kind of says wrong. But Tesla bulls, you're highlighting this. Tesla saw a 2.3 billion cash benefit from selling the cars out of inventory in Q3. That's why this number was up that high. This was enabled by a one-time pull forward as demand as the 7.5 thousand US tax credit expired. This will reverse in Q4. That's true. This part is true.
Absolutely true.
Yeah, Jeff says Tesla's shipments improved in each region consistently, not just a single region pull forward and inventory at 10 days of supply. So if you're looking at, all of this cash was because of the 7.5 thousand credit, but that's only in the US. But all the other regions went up as well. Greater China, 33%, North America, and 28% in EMEA was up 25%. So even Europe and China went up. You did point out, though, that this was because it was a really bad quarter previously. So these percentages are just a little inflated. I agree with you there. But Tesla has 41 billion in cash, higher than GM or Ford. So this is good. And by the way, inventory for Tesla is now at 10 days of supply. That is I think, a record. That's crazy. That's because they sold everything, right? Yeah.
Yeah, so this is interesting because GM's annual cash flow from their auto business is $24 billion. So Tesla is generating as much cash a year as GM is generating from their auto business. It's incredible. It's just incredible. Now, GM also has cash flow from its financing business, so it actually earns more cash from its financing business than it earns, at least on paper, than it earns from its auto operations, which is quite sobering given the scope and the size of GM, which sells, I don't know, 6 times as many cars as Tesla. Is that the right proportion? Something like that. Anyway, but Gordon is right. I mean, there's no doubt that we got 2.5 of the cash flow, 2.5 billion of the cash flow from pull forward of inventory. But you know what that also means? That means we had a $3 billion cash flow for the quarter. That's amazing.
Yep.
It's just
Yep.
amazing. It's like one of the worst third quarters in history in terms of growth of the company and so on and so forth. And there we are. We delivered cash flow that was second to nothing in the auto industry for a month, for a quarter. Second to nothing. I mean, come on, Gordon, lighten up here.
So last show you and I did, you went a little bit of a I don't know, a little bit of a spree
Thank
on talking
Yeah.
about cash and cash flow and how incredible Tesla is. Can you? This is the show where you do that again. Can you just explain what you were saying
I'm not
there?
going to rant about it, but
Yeah.
listen, at the end of the day, cash generation is critical to a growth business. And if you have three startups running at the same time, or at least two startups, I maintain they're three startups because everybody doesn't understand what's happening with Cortex 2. Cortex 2 is one of the largest, I mean, it is one of the largest data centers being built right now in the United States. And when you take that, I mean, it's clearly a business of its own. Anyway, for a company that is nurturing under its roof multiple startups on huge scale, not just on a gigantic scale, to be delivering this kind of cash flow, it's like people don't understand the value of it. It's like you take the very best venture capital company in the country, and you take 3 or 5 of its best startups, and instead of the VC having to plow cash in every quarter, which is normal, they're taking out cash every quarter. I mean, cash is the lifeblood of entrepreneurship. Without it, entrepreneurship dies. Now, it's insufficient, but it's critical. Without it, you die. With it, you probably still die. The odds are against you. But my God, you shorten those odds dramatically. Tesla is a startup it is a foundry for startups, and that foundry is powered by the fact that it generates cash. It's the most critical component of the Tesla story.
Wasn't it Jeff Bezos who said that free cash flow is the one metric that matters? Like if you ever look at any business at all, take a look at the free cash flow. That's the one.
Profits don't mean a damn thing.
Yeah.
The only thing that counts is cash. And Jeff is the living proof of it. He made losses for decades in a row, decades in a row, and that stock price just kept going up and up. Why? Because investors like myself, who are not that sophisticated, but we're able to read a balance sheet and we're able to read an income statement. More importantly, we were able to read the cash flow statement, and we saw quarter after quarter after quarter after quarter of cash flow growth, even though profits were down. So, I think
It was purpose. It was in purpose that they were spending R&D, building the company, expanding, because its gross margin is so good. They wanted more.
What is the lubricant of growth? Investment. Without investment, you don't get growth. Up the investment, you get greater growth. For a given set of circumstances, for a given set of factors, the more you're able to invest, the faster your growth. So here we have a situation. How did Jeff do it? He was making losses, but he was able to invest more and more. How did he do it? His vendors were sitting there waiting for 90, 120, 180 days for their money from Amazon. And Amazon was collecting the money in advance of the order. You had to pay them. You had to give them your credit card and pay them before they even shipped the good. So they're keeping vendors' money for 120 days on average, actually 90 days on average. And here's the magic of that formula. The more you sell, the more cash comes, the more net cash you have coming in. So you can actually advertise and sell your stuff almost at a loss and still grow your business. So he was able to bring those margins down to, a sliver. And he just kept buying market share and buying market share and buying market share because his vendors gave him the money to do it. I mean, how brilliant can you get? And here we have another entrepreneur, Deluxe, showing you that he's able to take cash out of an auto business at 3 to 5 times the rate of a Toyota or a GM. Actually, even more than 3 to 5 times the rate. How brilliant you have to be to take cash out of an auto business. Most auto businesses lose money. Ask Rivian. I,
They have set a record, right? Over 20 plus billion dollars of expenses so far, cash gone. But
it's more
yeah, I
now.
mean,
It's
we're
more
not
now.
even talking about auto business. We're talking about electric vehicle business. And there
Yeah.
is no other company, maybe BYD, maybe if you play around with their
BYD is losing
financials.
money right now.
Yeah, it's
BYD
pretty
is
obvious.
losing money. Yeah.
So here's a good, just kind of a backdrop of what happened just last week. So while Tesla reported their earnings and said that 4 billion cash flow, 41 billion in the bank, Volkswagen has negative 11 billion cash flow and 200 billion in debt. Just to be clear, these numbers, Grok confirmed that the free cash flow of around 4 billion, cash flow reserve of 41 billion for Tesla was correct, but the debt approximation 200 billion euro was also accurate. The alleged 11 billion cash flow negative was for forecasted gap, not the current figures. So it's true. These are the true
Yeah,
numbers.
they only lost 1.4 billion in cash last quarter.
Yeah.
I mean, you know, for an auto company to be losing cash for one quarter is bad. For more than one quarter is a disaster. For more than two quarters is it's over. So well, maybe it's not over, but it's
You have to,
getting close
yeah.
to the end.
You have to make structural changes, let go of factories, which we're seeing.
Yeah.
Stop new investments, which we're seeing. Announce new cars, but then don't actually deliver it. Stop announcing new factories, don't deliver it, and cut. And that's what they need to do. They should have done it earlier. That's what Elon does.
Yeah, there's no more
So
disciplined operator than Elon Musk. No more
yes,
disciplined
that's so
operator
true.
than Elon.
So let's get back to, so that's cash, which was a very important segment. We need to cover that so well, and you did a great job there. Services. So this part, people like me was ignoring it because it's so tiny. And it will be tiny over time, just like the auto business will be very tiny over time. And that's why, as you compare to Robotaxi and bot revenue, autos can be so small. But services is where FSD is going to show up maybe, and superchargers. And this is where it's jumped up. And CERN pointed out that in case you didn't notice, Tesla's services and other business is now lifetime profitable. So even this is on a gross margin basis. And guess what? Elon reposted this. He was proud of this. He saw this and he goes, "Yeah, this is true."
Critical. It's a critical number. Let me tell you, Herbert. I'm
Why?
probably repeating myself because I probably mentioned this on your show before. But 3 or 4 years ago, when I started dabbling in retail analysis, I did analysis of gross margins in Tesla, and I was attacked. I mean, talk about it, an attack from like multiple sides on X, at the time Twitter.
Twitter.
Yeah, where they showed that the gross margin was a lie of services was a lie, and actually, what's happening is that that services was going to overwhelm the company and bankrupt the company because
Mm,
they were hiding the fact that they were spending more money than they were setting aside for the warranty. I
mm,
did a warranty analysis then, and I proved that actually no, they were generating more money in their warranty reserves than they were spending. So this guy did this whole analysis. He was quite a big high mucky muck in the Tesla Q community, and he showed me in like acres of
mm,
spreadsheet analysis that they were going to lose money. And I did an analysis of that, and I showed that it was wrong. But here
mhm,
we have living proof that not only are the warranty reserves building up a very nice backlog reserve, which one day is going to come and splash onto the balance sheet, but our services are actually being run positively in terms of cash flow and in terms of dollars. So it's very important, very important. Now, some of that is, the problem is that it hides a lot of other businesses, but they're relatively small to the whole Tesla story. But they're very good news. Very good news.
mhm. So the other one I wanted to, the final thing I wanted to ask you about is R&D. So they confirmed that they spent $9 billion, which is a great number. Happy with that. And obviously we saw the expansion of Cortex, right, and AI, and they're doing great. But they said we are going to be increasing this substantially over the course of the following year because of AI and robots. And so I just wanted to get your opinion on the R&D
I've been
spend.
saying this for multiple quarters. Whenever anybody wants to start paying back cash, I say, whoa. And they say,
Stupid.
yeah, but we don't spend money on R&D. We always, I said, wait. And I had an analysis of how much money they're going to be spending on R&D. And we haven't hit the steepness of the curve yet. We're going to get a shock one quarter when our R&D is going to jump 3x.
I'd be so
2x
happy if I hear that.
2x the first jump, and then 3x. It's going to be very considerable. We've got a lot of R&D to come. A lot of R&D to come. It is truly amazing how much R&D, how much functional development that they get out of their R&D. That's I sing the praises of Elon Musk as an operator again and again and again, but it's in the R&D line item that it shows up for the most part.
Yes.
Do you know how much BYD spend on R&D? 7 times the amount of money. 7 times the amount of money as Tesla. Literally. I mean, R&D is like their biggest expense on the books. And they write it down over 5 years, is it? They capitalize it and then they write it off over time. And that's why their margins are compressing, because we are now beginning to pay for the really high levels of BYD R&D expenditure. With Tesla, you don't get that margin compression because they write it off in the month that they spend it, in the quarter that they spend it. So people don't understand that, that value of how Tesla account for their R&D.
I wonder if there's a stat where, I think you've obviously been saying this for so long and we're seeing it, that Elon Musk as an operator, CEO, has shown time and time again that his ability to get gains and sales out of the least amount of R&D or dollars spent is unbelievable, right? I don't know. I wish I had the stat to show, but is that true?
Well,
Yeah.
The problem with that statement is that General Motors doesn't have to spend much on R&D at all because they've got 50-year-old designs, and they've got 50-year-old manufacturing skills, and they've got 100-year-old, I should say, designs and 100-year-old manufacturing skills. And the problem about that is that what they're shipping you is 100 years old in terms of technology, so like the battery technology.
CDs. So many of their cars still has CD players in it.
I mean, can you credit that? That's not 100 years old, but the battery technology is pretty much there, at least the wiring in the cars. Anyway, the point is that, it's very different to compare the R&D of a company that is, the leading EV, the first major EV manufacturer and still the leading EV manufacturer in the world, to compare them to a company that's producing legacy and only legacy vehicles, because the R&D is not done by them, it's done by their first tier OEM, first and second tier, and even third tier OEMs. So you have to look through their balance sheet.
It's hidden
to see that. Yeah.
Larry, you're amazing. You're fantastic. You've been on fire the last 2 shows. And the one thing that this show proved this is that your research that you've done deep dives on energy, and in fact, you did a deep dive on the tier supply chain of Tesla and I'm sorry, all companies, all auto companies, all auto companies. That was a very eye-opening show that we did before, where you presented in detail the supply chain, and that's where they hide a lot of the R&D. They hide some profits. They hide cash. They hide all sorts of things. Debt. It's all there through their suppliers.
Not only do they hide it there, they lose it there because they don't own it. They end up enjoying the fruits of that R&D, but they don't own it. So what is the value to them? Whereas Tesla not only spends so much less, it actually owns the R&D that it supplies its supplier.
That's right. That's the opposite way, isn't it? Yes.
It's complete. Nobody understands that, and nobody understands the value of that over time.
Yeah.
It's
Yeah.
just, there are the hidden gems in this company are so deep because the practices of modern auto manufacturers have become so bad that Tesla didn't look at them. Tesla didn't do what they did. Tesla just did their own thing. And so
Mhm.
there are just so many of these hidden gems. Anyway, yeah, I'll get
Thank
off
you
my
so much, Larry.
soapbox.
No, you are amazing. Thank you so much, Larry. If you want to see these research that he does, and he does them quite regularly, go check him out on his X account at Tesla Larry, and he shares it.
And
Thank you so much.
today
Appreciate
I'll be dropping
a
today
new
or
one. Yeah,
I'm dropping a new one, and this
yeah.
is on
Thursday.
backlog
We're
and
yeah,
this is
backlog
on
on energy.
backlog
Yeah,
and energy. Yeah.
yeah. We're recording this on Thursday. This show will publish on Monday, so check out his Tesla account, and you'll see it there. Thanks, everybody. Bye bye. His X account. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.